Welcome back to Investing Talk podcast. Today, we're zeroing in on Viatris. We've got some recent financial details, regulatory news, and an analyst summary to look at. Our goal here is really to make sense of all this for you without getting too bogged down in, the jargon.
Viatris is an interesting case. The global healthcare company formed from Mylan and Pfizer's established brands. They sell both generics and brand name drugs. Big focus on access to medicine worldwide.
Right. And we have their 2024 results, plus their outlook for 2025, and also some insight into how the market reacted and, well, what's behind that reaction. We should also touch on the risks and maybe some opportunities. So let's jump in.
Okay, starting with 2024 performance. Total revenues hit $14.7 billion. They met their revenue guidance, and they actually did better than expected on free cash flow, generating $2.0 billion.
So initially, that sounds pretty positive, doesn't it?
It does, though it's worth noting they reported a U.S. GAAP net loss of $634 million.
Okay, but their adjusted EBITDA was $4.7 billion. How should we understand that difference? Is one figure more important?
Well, the GAAP number includes things like depreciation, maybe some one-time charges. The adjusted EBITDA gives you a better sense of the core operational profitability, the cash being generated day to day. And they also managed 2% operational revenue growth, even after some divestitures. That suggests some underlying strength.
Okay, so the core operations were profitable despite that reported loss. That's a key distinction.
It is. And another point on the positive side, their debt management.
Yes, I saw that. They paid down a significant chunk.
They did. Around $3.7 billion in debt paid down. That brought their gross leverage ratio down to 2.9x.
Which is generally seen as a good thing, right? Strengthening the finances.
Definitely. Reducing debt like that makes the company more stable, financially speaking, less risk.
And for income investors, the dividend.
They kept it going, $0.48 per share annually. That's the 5th year in a row now.
Consistency there. What does that usually signal?
It can suggest confidence in future cash flows, a commitment to shareholder returns. But this leads us to the 2025 outlook.
And this is where the narrative shifts a bit.
It really does. They're forecasting a significant negative impact for 2025.
About $500 million less in revenue and around $385 million less in adjusted EBITDA.
That's the guidance. And it's primarily linked to regulatory issues.
At their facility in Indore, India? Is that right?
That's the one. An FDA warning letter and an import alert related to that site.
Okay, so how serious is that? What does an import alert mean, practically?
It's serious. It essentially means the FDA can block products made at that facility from entering the U.S. market. This directly disrupts production, supply chains, and ultimately sales and profit. It highlights a major risk in this industry: compliance.
So a big regulatory hurdle impacting this year's expected numbers.
A very significant one.
Which explains the market reaction we saw.
It does. The stock price dropped sharply after they announced the 2024 results and this 2025 guidance.
How sharply?
About 15% down on February 27, 2025. A single-day drop. That's quite a reaction.
Wow. Okay, so clearly the market didn't like the guidance or the uncertainty from Indore.
That's the main takeaway. Investors really don't like regulatory uncertainty, especially when it translates into such concrete negative financial guidance. It just puts a big question mark over things.
Understandable. Now, looking past this immediate hit, what are their plans? They mentioned returning capital.
Yes. Despite these challenges, they're planning to prioritize capital return. The aim is $500 to $650 million in share repurchases.
What's the thinking there? Signaling confidence.
It often signals that management thinks the stock is undervalued and believes in the company's long-term ability to generate cash, even with these near-term headwinds.
And they also have some potential catalysts coming up in their drug pipeline.
That's another key area to watch. They expect 6 Phase 3 data readouts in 2025.
Phase 3, that's late stage, right? Close to potential approval.
Exactly. For key assets like selatogrel, cenerimod, sotagliflozin, positive results here could be really significant for future growth. Could help change the narrative again, potentially offset some of the current negativity.
So definitely something to keep an eye on. I also saw they were at a healthcare conference recently, Barclays.
They were. Participating in events like the Barclays Global Healthcare Conference is important. It's a chance to talk directly to investors. They can address concerns, explain their plans for the Indore facility, outline their strategy. It's about managing the message.
Makes sense. Now, stepping back, the whole pharmaceutical sector is pretty competitive, isn't it?
Highly competitive. Constant pressure on pricing, new drugs coming from rivals, and always the need for strict regulatory compliance. Which brings us back to Indore.
You called that a significant red flag earlier. Why is it more than just the immediate financial hit?
Well, it raises fundamental questions about their quality control systems, their manufacturing oversight. An FDA warning letter means serious issues were found. Fixing these things takes time, costs money, and there's always the risk of further scrutiny or delays impacting other products or approvals.
And you mentioned potential concerns about disclosure timing.
There have been some suggestions or perhaps concerns raised about when exactly investors were fully informed about the extent of the FDA inspection findings. That kind of thing can affect trust.
Right, transparency is key. But it's not all challenges. What are the core strengths Viatris still has?
Well, look at 2024 again. Strong cash flow generation, even beating their own targets. That shows the underlying business has muscle. And that big debt reduction we talked about, that's effective financial management. A solid foundation.
And their product mix, does that help?
It should. Having both generics, often stable revenue, and established brands, usually higher margins, provides some resilience. It's a diversified portfolio. Plus, their global scale and existing supply chain are major assets in this market.
So, strengths to lean on. And those upcoming pipeline results, those are the big potential opportunities.
Those phase 3 readouts are definitely key potential upsides. Positive data could really boost the outlook. And of course, successfully fixing the issues at the Indore facility and satisfying the FDA would be another major positive catalyst, removing that overhang.
Okay, but there are other risks too. You mentioned a lawsuit.
Yes, a class action lawsuit has been filed. It alleges securities fraud, essentially claiming they misrepresented the impact of the FDA warning letter.
So, potential legal costs and reputational damage there.
Exactly. Lawsuits add another layer of uncertainty and potential financial liability for investors to consider.
And then there are the broader economic factors, like interest rates.
Always a factor. Changes in interest rates affect borrowing costs, debt management strategy, and the overall global economy impacts demand and healthcare spending generally. These aren't unique to Viatris, but they matter.
So, taking all of that in, the analyst summary recommended a hold.
That's the summary perspective provided. A hold usually reflects that balancing act we've been discussing. You have these significant regulatory challenges weighing things down, but also the underlying strengths, the cash flow, the debt reduction, the pipeline potential.
So the analyst is basically saying, let's wait and see how things play out.
That seems to be the sentiment. Let's see how they navigate the Indore remediation and if those pipeline drugs deliver.
Okay, so wrapping this up, based on the information we've discussed, Viatris is clearly facing some significant headwinds right now, mostly from those regulatory problems, and that's definitely casting a shadow on their near-term finances and market perception.
It really shows how interconnected everything is in a big pharma company like this. One facility issue ripples outwards, affecting financials, stock price, even legal standing. It underscores the huge importance of operational execution and regulatory compliance in this sector. And it raises a good question for anyone listening and learning about investing. How do you weigh these kinds of short-term, very visible problems against a company's potential longer-term strengths or recovery prospects? That's a core challenge.
We certainly hope this look at Viatris's recent situation has helped to clarify some of the key factors for you. Remember, this is a snapshot based on the info we reviewed. For the very latest real-time stock data, analyst ratings, you'll want to check financial news sources or Viatris's own investor relations materials. If you found this discussion helpful and want more analyses like this, please do subscribe, like this recording, and maybe leave us a comment suggesting what we should look at next. Thanks for tuning in to Investing Talk Podcast.